Alright, so in true King form, I'm going to give you some fucking gold in this video, breaking down the whole advice process essentially on how to build your own advice. It's going to be like a bit of Barefoot Investor in a quick little video, or it's also going to be seen as a summary to our 15th episode financial education series I did with Loz. So when you're building your financial strategy, you need to make sure you break it down into the steps in order of what needs to happen. The first thing you need to do is you need to figure out what your cash flow looks like. Yeah, how much you need to earn, how much you are earning, how much you're spending. And you need to allocate towards savings, survival costs. Okay, so survival costs are the first thing. You need to know what that looks like because you need to be able to allocate to it now, but also be able to build a buffer or a way that if something goes wrong, you can still afford that. Because if we can't survive, we can't thrive. Yeah, so we need to make sure we start with survival costs first. Once we go to survival costs, then we can start allocating to future planning, and we should start with worst case scenario stuff. So worst case scenario home, worst case scenario retirement, age 60, 80k per annum, for example, utilising superannuation, most effective way to retire from 60 onwards. We allocate towards that. Then we can add a little bit of lifestyle in. Okay, let's go across to maybe add travel, 10k a year, whatever it is, right? Maybe you don't like to travel, maybe you go camping, so it's cheap, maybe you want to buy some clothes or you have a hobby that you like, right? We add it in there. And then we start building. Okay, so from there, now we want to increase our home. Maybe that's your next priority, okay? Or maybe kids' education, whatever it is, we need to allocate the amount of cost to it. And then we need to start going from there. Now, before you start allocating there, the first thing we need to do is set up our foundations. Yeah. So now that we know what our survival, our future planning, worst case scenario, and our base lifestyle cost to keep some sort of internal happiness, then we need to go back and go, okay, now we need to look at our risk management. Okay. So is our insurances in place? Yeah. And we've got a whole video on this needs analysis stuff that you can look at on how to figure out how much insurance you need. Most people go, yeah, it's covered in my super, and you have 100 grand life insurance. It won't even cover the fees to your bloody estate planning, right? So you need to make sure you do that. You watch that video and you look at how do I build the right insurance portfolio, because we want to have the right amount of insurance that covers and gets us through to our goals, but not so much that we can't afford to do anything else. Yeah, we need to find that balance. You need to find the best way to fund it. Do you put it in super? Do you keep it outside of super? Is it tax deductible, etc., etc., etc.? When you transfer it to whoever gets it, if something happens to you, is it tax effective? Do they get the whole amount? Is it going to cover what we want it to cover? So we need to build our insurance portfolio. Then we need to make sure our super strategy is the lowest price for the best strategy possible, and we're contributing the right amount inside the best product. Yes, we need to set that up and make sure our beneficiaries are in order, etc., etc. Then we want to make sure that our debt, whatever debt we've got a debt consolidation, debt reduction plan in line with our worst case scenario. And then we need to look at estate planning. Make sure your wills, power of attorneys, all that stuff set up, right? And then that's your foundation. Yeah, that's where we start. So cash flow, insurance, super, estate planning. That's the debt reduction. That's the basis behind your foundation. So then we can move on to scaling and growing. So now that we've done the worst case scenarios and the foundations, well, now we need to look and go, okay, maybe the next priority we want a bigger home, we want a better home. Well, how much does that cost? How much do we need to pay? If we're in a current home, how much do we need to pay down this debt by to be in line with our dream home? Because that's what you need to do. You need to build your equity in line with that dream home, okay? And if you can't make that, then we need to look at investment options, we need to look at earning more, and we potentially need to look at other ways to be able to leverage that equity to make sure that we can get in line with our dream home. Once we do that, then we go to the next priority. What it might be, you want to retire at 55. Now, you might want to bring back that retirement age a little bit. Okay, well, then we need to develop an investment portfolio. What's the most tax-effective way to do it? What's the most cost-effective way for you to contribute to make sure it looks after you between the gap of when you want to stop work and when superannuation kicks in? Then you might say, okay, well, now we want to look after the kids and make sure that their education's covered, or they get a house deposit at 21, whatever it is. Do we save in a bank account? Not really. Do we do it in a share portfolio, but then the income will hit our tax rate, we'll lose a lot of money to tax? Consider stuff like investment bonds versus putting it into your own mortgage and pulling it out later, all those kind of things, right? You need to go through those strategies and have a look. And then we go back to lifestyle. Well, now that we're looking after our second tier of priorities, what other lifestyle stuff can we add? Because we might not make it to 60, we might not make it to 50, we might not make it to 3 weeks from now, right? So we need to make sure we're enjoying our life to the fullest along the way. So what can we do, right? What can we add? It might be extra travel, it might be more spending or more dining out, whatever it is, add it in there. Be realistic, don't be stupid, and then we move on to our next wealth goal again. Okay, well, our next wealth goal, now we might want to go the dream home. That was the ideal home, let's go the dream home. We can build our portfolio to generate X, Y, and Z, and this will align us with our dream home. Well, we need to pay down our rate at this much, we need to earn this much more, whatever it is. And then we might want to start saying, okay, well, now we want to build the kids fund more. Now we want to retire at 50, retire at 45, build a business, whatever it is, and you can allocate your funds that way to start that process. And then once you've achieved all your wealth goals, then we just go all into lifestyle, right? We go, okay, well, maybe now I can get that car. Now I want that dream car. Maybe I want that boat. Maybe I want to travel 20 grand a year, whatever it is, right? build it in line, build your expenditure and your strategy in line with your priorities, and that's how you get through. So go and watch our 15 episode financial education series on YouTube. This is a quick summary for it, but that's the basis behind it. There's lots of good content there, and it'll take you step by step through the entire process on how to build your own financial strategy around the basics of making sure you live your dream life.